Execution. Now that you understand the four main trading orders, let's talk about how you actually execute them. So essentially, you've got market orders and you've got limit orders. They're the two main ways that retail traders can actually get in and out of the market. So when you're looking at TradingView, and let's break it down for you, we'll start with the market orders. A market order, by definition, is a instruction to buy or sell an asset immediately. So it executes a trade with your broker at the closest price that's currently available. Now, it does guarantee you a position instantly, but it does not guarantee the exact entry price. So in simple terms, you're saying to the broker, get me in now at whatever price is currently available. It's fast, it's easy, and usually you need a proven process. For example, the market opens, you see your rules are present or your edge is there. So you execute a market order immediately because you're reacting to the existing price action. You're reacting to data and probabilities. Let me show you what I mean. An example in real time on the live chart. We pull up TradingView. Now on the right hand side, we have our trading panel, which we already went over. And here we can choose between market orders, limit orders, or stop orders. Right now, we're gonna go with a market order. I'm gonna make sure I have my stop loss on. And I'm gonna make sure this is no more than 2% of my total account. Click buy, done. Right, my stop loss is all the way down here because this is a 100K account. It's just a demo account for demonstration purposes. But if I want to click that, drag it up, I can do. But I'm in an instant trade. It executed at market, best price that's currently available. And you can see that we're live right now on the chart. If I wanted to close that out and put that profit in the bank, simply right click, close the position, money goes back in the brokerage. And that's how simple, easy, and quick it is to execute at market. Don't overcomplicate it, get the reps in, and make sure you know what buttons to click so you're primed for profit. Now let's talk about limit orders. A limit order by definition is an instruction to buy or sell an asset at a specific price. So for example, the S&P 500 is trading at $5,000, but you want to buy some at $4,000. So you set a buy limit at $4,000. Remember, this guarantees your specific entry price, $4,000, but it does not guarantee that your order will ever be filled, right? The market may never go to $4,000. So your order will only be executed if the market reaches your set price. If price never hits that level, let's say, for example, the S&P only goes to $4,001 before moving higher again, that means you missed the trade, your order's not filled and didn't get executed. Now, while you can trade successfully using limit orders, most retail traders don't. They use them completely wrong. Okay, retail traders often use limit orders because they're trying to predict what the market's going to do rather than reacting to a proven process, right? Reacting to the existing price action. So I think, the S&P 500 is going to bounce from 4,000. So I'll set a buy limit there. Or I think the S&P 500 will dump from 6,000. So I'll set a sell limit there. The problem with this is, guys, now you're gambling, right? You're making decisions based on what you think will happen rather than what has already happened. And to be honest with you, when it comes to trading, guesswork is fucking expensive. And I don't want you guys to lose money. I want you guys to make money. So if you're using them, make sure you use them with logic and probabilities and data, not hope. Now again, let's look at this example on a live chart so you can see exactly what I mean and how to execute those in real time. When we come over to TradingView, again, you have your trading panel on the right-hand side. Okay, this time we're gonna go and set a limit order. So we click on limit. And I'm going to use the long tool for this example, right? Actually, I'll use a short tool. So I'm going to say, if the market comes up here, I think it's going to dump, right? This is what I'm saying. If I set a limit up here, right, it will fill me at my entry price and it will take profit down here. So again, the easiest way to do this is right click, create the limit order. We'll pre-fill all of the data here. Down the bottom, you've got the time in force, which is it good for the day, right? Meaning your limit order will be canceled after that trading day if it is not reached. Is it good for a week? Do you want it on there for a month? Or is it good to a certain date, right? Meaning if the S&P 500 comes down to 4K between now and the end of the month, execute. After the end of the month, don't execute. All right, so you can always generally have it on day or week if you're swing trading. And you want to make sure that your take profit and stop loss is clicked. This data is pre-filled from my tool that I've drawn on here. Now I'm going to type in one contract because remember, if you're a beginner, you should only be trading one contract. Click sell, And now to remove this, just so it's easy for you to visualize, you can see that I have my stop loss up here, my sell limit, and my take profit. So what I'm saying is, when I come up here, put me in a trade, set my stop loss at this level, and I'm suspecting or speculating that when we reach that level, I think it's gonna dump and come down here where I'll take profit. This is how you use limit orders. I personally don't use them very often, although I have done and can do successfully. A lot of people don't, so I want to make sure that you understand the difference between market and limit, and also where to find them on the chart and how to execute them. If you have any questions, send me a message. I'm here to help, and I look forward to seeing you in the next module. Let's get it.